With Tai Hui, Chief Market Strategist with JPMorgan. Tai, good morning and thank you for joining us. Tai, Indian markets are suddenly consolidating. Do you think in Indian stocks the hope rally is over and now reality and gravity has kicked in?
Well, I think certainly there's been a huge amount of optimism right after Modi and the BJP has been voted in. And clearly the momentum in the market has been extremely strong. So I'm not that surprised that we're going through consolidation right now. But nonetheless, I'm still optimistic in the longer run, medium to longer run with the Indian markets, because we believe that the political good news may have been priced in, but I think we've still yet to see the economics react favorably to the new government. I think, as you rightly mentioned earlier, we are seeing some potential challenges on the horizon. For example, potentially poor monsoon and food inflation, and also oil prices rising is clearly a risk to India as well. But overall, I think we are looking towards a medium to longer term, still a positive outlook for the Indian market.
Tai, you just talked about inflationary pressure. We've recently had, or rather yesterday I should say, have been announced SOPs for the sugar industry. We've had railway freight hikes and a very steep one in that. And food inflation in any case for India is a big problem and has been for a while. Do you think inflationary pressures are going to bog down the RBI, which will not be able to cut interest rates anytime soon, and that by in turn put pressure on the industry as such?
Well, frankly, I think even before this, the risk of poor monsoon starting to unfold itself, we have not been expecting the RBI to be able to cut rates anytime soon. At the end of the day, despite the optimism on the economy, the level of inflation with or without the monsoon was still, or without the poor monsoon, was still running relatively high and maybe a little bit too high for RBI's comfort to cut rates. And also bear in mind that U.S. Federal Reserve is still in tapering mode. They're likely to raise interest rates next year. So all in all, I think the room for rate cuts in the short term continues to be very limited. In fact, I'm sure that you've heard on the ground that the prospects of rate hike is now being discussed a little bit more compared to 2 or 3 months ago. So I think on balance, I'm still expecting interest rates to stay roughly where they are right now. But I think that the risk of a rate cut is still quite far away from where we are now.
Now, you just talked about consolidation. How long could the consolidation for Indian equities last? And do you think the next trigger point is going to be the Union Budget, which has now been, going to be presented on July 10th? Or do you think it is going to be a longish patch of consolidation slash, profit taking?
Well, I think it's difficult to gauge exactly how long the consolidation is going to be. For example, if you look at the S&P 500, in the past few years, consolidation tends to be maybe a couple of weeks or 1 or 2 months, but the overall uptrend continues to be intact with the S&P 500. I would not be surprised to see something similar with India, given the amount of optimism and prospects that's coming through. Now, whether that could be the next trigger for the new phase of rise in the Union Budget, timing-wise is a possibility, but I do question of what kind of policies that's going to come through that could renew market optimism. Personally, I'm more relying on the economic data or corporate sentiment to drive the next leg up. But the Union Budget is a potential candidate, but it really needs to take something very special for the markets to react very favorably, given the fact that a lot of the political good news is now priced into the markets.
But India is a large economy. It's a $1 trillion plus economy. Economic recovery is not going to be easy. Economic recovery is going to be a slow and a grinding process. It could take 2 quarters. It could take 3 quarters. So do you think Indian markets will not go anywhere before next 2 or 3 quarters now?
I do agree with your first comment that the Indian economy is huge. And not only that, but also corporates in general, not just in India, but globally. It takes a long time to implement their investment strategy. So, we may not see data really pick up until 2015 calendar year. But I think what's important also is to appreciate that some of the companies are starting to plan ahead, and whatever messages that you're going to get from the companies in terms of their future investment plans, the market may take one step ahead and price that in before they get confirmation from the economic data. So I think obviously the data themselves are going to be crucial in defining the timing. But to me right now, I'm not just watching out for the data, I'm also watching out for messages from the corporate sector and their intention to step up investment in India.